we are moving into our financial education segment. We've gotten some great presentations thus far, but we have waiting in the wings Mark Putrino. Mark is one of our technical analysts, a Benzinga staff writer, is coming on for an education segment. So let's add Mark. Mark's got some slides. Mark, how you doing?
Hey, I'm good. How are you?
Doing well. Good to have you on. We are going to let you take the floor here and walk us through small cap stock trading. This looks fantastic, man.
Okay, cool. All right. Well, thanks everybody for checking in. First I'll introduce myself. My name's Mark Putrino. I am the head of the Benzinga Trading School, and I have my background is in the institutional trading world. I was in it for about 20 years. My first trading job out of business school was with Mario Gabelli, who's a really well-known manager. I'm sure a lot of the people who are watching this have probably heard of him. While I was there, I was a market maker on his broker-dealer desk. So that was a great opportunity, great learning experience. Then I went over and spent some time trading for Steve Cohen, who is mostly known these days by the show Billions, which allegedly is based on him. I've never watched the show, so I don't know if it's true or not. You would be surprised how many people say, "Oh, you work for Steve Cohen? Is Billions true?" Anyway, I have never watched Billions. After that, I was a head trader at 3 different money managers, each for about 5 years. And I oversaw the trading of pretty much any strategy you could possibly think of, equities, bonds, currencies, options. So I've been around the block a few times. And probably about 5 or 6 years ago, I decided to leave the industry because it just became no fun. When I first started in the industry, in the 90s, it was fun. There was a lot of camaraderie, a lot of socializing, going out to dinners and games and so forth. But then a lot of things just got computerized, and computers replaced most of the people. Just to give you an example, everyone's familiar with Goldman Sachs. When I started trading institutionally, Goldman Sachs had what are known as a cash equities trader, someone who trades stocks as opposed to derivatives or whatever. They had 600 cash equity traders. Okay. Now they have 2. And the only reason why they have 2 is because if you work for a broker dealer or an investment bank, you by law have to take a vacation every year because they want to make sure if you're trying to hide something or an error or something that you can't do it. So you are legally required to take a vacation. So one person could do the work that 600 people did, 25 years ago. So I wanted to get into education because it really bothers me when I see a lot of the things out there in the trading world. There's a lot of misinformation, a lot of people trying to sell you like some secret system, which they don't exist, some secret system that's always right. I saw one time where in a newsletter, a particular author or whatever you want to call them was bragging about how they recommended a stock that doubled in value. So it's like, oh, in 1 week, I doubled my money. So I thought, well, that sounds pretty good. Let me take a look at it. Turns out that the stock went from 1 cent to 2 cents. Okay. That's not the same as going from 10 to 20 or 50 to 100. 1 cent to 2 cents isn't really a big move. Every stock has a bid and an offer, right? The bid is the highest price anyone is willing to pay you at the time. The offer is the lowest price anyone is willing to sell at the time in the market. There's a bid and offer on every stock. So if this particular stock was bid at 1 cent and offered at 2 cents, if someone came into the market and sold, they would have gotten 1 cent. Okay. Then if 5 minutes later, someone came into the market and bought, they would have paid 2 cents. So the stock this promoter is saying, oh, the stock doubled, but in reality, it didn't move. So when I see things like that, it kind of, that's what kind of made me come over here, because I like teaching people. And so far, the trading school is going very well. I would invite you to check it out, but let me go into some things about trading here. Now, in our classes, we focus on basic fundamentals and common sense type stuff. We focus on what does an institutional trader focus on? Like when I would go into the trading desk in the morning at 7, what am I looking at? I'm looking for the stocks that we're trading or the investments we're trading. I'm looking for which levels are important. All right. Because particular price levels can be very important. I'm also looking at, which we're not going to cover today. Today, I just want to focus on levels because I think this is a good educational thing, and we don't want to force too much at once, but we're just going to focus on levels. But in the classes, we have a class on levels, then we have a class on trends, right? Because the stock is always trending; it's always either going up, down, or sideways. Today's class, we talked about momentum. That's the force that's driving the trend. So we keep it really, really simple. It's just basic supply and demand dynamics. Every chart should be viewed through the prism of what does this show about supply and demand. If you can keep that in your mind, you can look at charts and get a much greater sense of them. All these patterns, I'm sure you've probably heard of the head and shoulders pattern or ascending triangle. If interpreted correctly and understood right, these are graphical illustrations of what's going on in the market in the sense of what are the supply and demand dynamics? Are they shifting? Are they not shifting? Some people think that reading charts is like, reading tea leaves. Well, for a lot of guys or a lot of people out there, it is. And unfortunately, technical analysis has a bad name, but I can understand why. A lot of the technical analysts don't really understand the fundamentals, like what I just told you. They look to find these patterns and they think it's this or they think it's a head and shoulders, but they don't really understand just what it is that they're looking at. Some other analysts go into these really far out esoteric techniques like harmonic charts or Gann analysis. If you can make money with that stuff, that's great, but I don't do it because in the institutional world, we just don't do that. So I never did all that stuff. We just focus on what are the trends, what are the levels, what's the momentum. So sometimes the reason why a particular level is important is obvious. It could be a round number, like $100. A lot of people will say, they bought a stock at 80. Oh, if it gets to 100, I'll sell it. They don't say I'll sell it if it gets to 99.6 or if it gets to 100.34. They say I'll sell it at 100. So what happens as a result of this is when you get to these round levels, which we call psychological levels, they may be important, right? So that's one reason why we'll know why a level is important. But sometimes the reason for the importance isn't obvious. We could just see a really clear support level, but we don't know why support's there at some strange number. But we don't need to. We just need to know it's there. Like Neil, who is a colleague of mine here, always gives a great analogy. He says, you could be a professional race car driver, but you don't really need to understand the internal combustion engine and how it actually works, right? My analogy is, I know when I flick on the light switch, the light's going to come on, but I can't explain electricity to you. So, but we'll delve into this a little more. So sometimes a level can be important for months or even years. There are support levels and resistance levels that can retain their importance for years. What is a support level? Now you might ask. Well, support is a large concentration of buyers who have gathered at a certain price. A bunch of investors all want to pay, say, $20 for a stock. So at that level, there's going to be this concentration of buyers, and we call that support. Generally, if a stock is going down and it gets to support, it'll stop going lower because there's enough demand to absorb all the supply. Resistance, and we're going to go through these separately, and I'm going to show you some examples. So if you're not following, just be patient because you'll see what I'm talking about, and this will really help your investing and your trading. Just having this basic knowledge of knowing that certain levels are more important than others is enough to help you. And what's really interesting is a level that was resistance can turn into support, and a level that was support can turn into resistance. And we will examine this a little bit more. So let's delve into support. You'll notice I put the word demand here too, because remember, when we're looking at charts, we are looking at a graphical illustration of the supply and demand dynamics that are occurring in the market. So we just mentioned support. It's a large concentration of buyers who are all trying to pay the same or close to the same price. So now at a support level, there is more demand for the stock than there is supply. The buyers can't buy all they need to. There's more demand than there is supply. So what happens if a stock is going lower and it reaches a support level, it'll stop going because now there's going to be enough demand to absorb all of the shares that the sellers are selling. At support levels, sellers can sell all they need to. There's enough demand to absorb all of the supply. So this is why market sell-offs pause or halt when they reach support levels. And this is a good thing to know for a lot of reasons. For example, we have a student in the class who wanted to place a buy order at a particular level. So we looked at the chart together, and it turns out that buy price was below a very, very clear support level. So what we talked about in the class was the stock was trending lower, and we said if it gets to the support level, there's a good chance it stops going lower, and it reverses and it starts going higher. That's exactly what happens. Now, the student, had they placed their order where they originally wanted to place it, wouldn't have gotten executed. The stock didn't drop that much. They wanted to place their order at like 20, but we saw there was really significant support at 21. So the stock got to 21, reversed, and now it's trading around 30. So as a result of our conversation, the student placed their order slightly above the support level. They placed it, I think, at like 21.25. So they were able to buy the stock, and now it's trading around 30, and they have a really nice profit in just a matter of maybe 3 weeks or a month. So had this student not understood what a support level is, they would have had their order out there. It would have never gotten executed. And now the stock's at 30, and they would be upset and asking them, what they did wrong. So we have to let the market tell us what to do. We can't outguess the market. If we see a support level, well, we should put our buy orders a little bit above it. That's the market telling us what to do. We're not just guessing. So resistance is the opposite. Resistance is a large concentration of sellers who are all trying to sell at the same price level. So at a resistance level, there's more supply than there is demand. A buyer can buy all they need to at a resistance level. They don't need to push the price up any higher. There's going to be more than enough supply to satisfy all the demand. That's why rallies pause or halt when they reach a resistance level. And we could use the same logic as with the buy order. We could say a particular investor wants to sell a stock at a certain price. Say they want to sell it at 30, and they're not aware that there's a lot of resistance at 29. Well, say the stock is at 25, it could get to 29, it could roll over, and it could go to 2. Now, this investor missed selling it because they didn't understand where or how to look at resistance and support. So there's a lot of ways this can help you. Order placement, you can also use it for order targets, your sell targets. You buy a stock and it starts going up and you say, well, where should I sell it? Well, if you look at the chart and you see that it's approaching a former resistance level, there's a good chance it's going to hit resistance there again. So that would be a good place to have your sell order, or a logical place. So I just want to show you a couple stocks here. And my intent is just to show you that there are clear levels that are out there. And this stuff that I'm talking about is, it's true. I'm not just making it up. A lot of times the levels won't be as clear as in these examples because it's usually more of a zone. But sometimes they can be really narrow. It all depends on the stock. So this is this Naked Brands group. This is a penny stock. Right now it's trading around 65 cents. But look at the support level down here at 50 cents. Okay? Like, you don't need to be a market guru to see this. When the stock was selling off, remember, it got to support. What is support? Well, at a support level, there's more demand than supply. There's enough demand to absorb all of the shares. So the sellers don't need to sell it down anymore. So what happens? It stopped when it got to the support level. Rallied again, came back to this support level once more, rallied again, came back to the support level once again. So this is over the course of like 2 months here, right? Then in July, it got to 50 cents again. Once again, it was a support level. And then here in August, it got to 50 cents. Now, I would be willing to bet, well, we don't want to say bet when we're talking about investing, because we're not betting or gambling. We're making educated decisions. At least that's what we should be doing. Most investors that get wiped out, it happens because they make emotional decisions. They guess. They don't have a plan. You need to have some kind of a plan, because you need to have something that's going to take your emotions out of it. I'm sure many people that are listening to this probably bought a stock and it went down a little bit and they just held on to it, hoping it would come back, and it just never did, right? You can't trade on hope and you can't guess. Now, how would you use this? Well, if Naked Brand gets back down to around 50 cents, there's probably a good chance there's going to be support there again, and it may bounce. So in this situation, if you wanted to buy it, you could put your order at, say, 51 cents. You don't want to put it at 45 cents because it may never get there. So this is a clear example of a support level. This is this Enservco. Now this is an 18-month chart, right? So way back here, when the COVID crash happened, this stock found support around the 110 level, and then it rallied. Then come April of May of this year, it found a little bit of support. And then in July and September and August, it was support again. So this is, sometimes you might hear the expression, markets have memories. And this is what people are referring to. A market has a memory. The market remembered that there was support at this level. I mean, how is this possible? Or there are a bunch of people that said, I'll buy it at 110 here. And were they patient? Do they wait for, a year and a half for the stock to come back? I mean, I don't know. I don't know. It's one of these amazing things about the market and about looking at charts. But it's a clear example of support. So, if this thing gets down to about 110 again, and I think it's getting pretty close, this could be something that we consider potentially buying, because it might rebound again like it did the last times. So support and Enservco at 110. This is CVD equipment, and I'm just pulling these stocks out of the air. I just looked for ones that were small caps that had clear charts. So I don't know what these companies do. This is not a recommendation to buy them or anything like that, but it's just a graphical illustration that are clear. So in this stock, we have clear support down around the 390 level. This is the COVID crash. This is April. This is May. Actually, I take that back. This is not the COVID crash. This is March of this year. But it fell to the 390 level, found support and rallied, found support and rallied, found support and rallied. Then in July and August, it was support again. So another example of a clear level. We also on this chart see a clear level of resistance at 525. When the stock ran up, but when it got to 525, it ran into a wall of sellers. And the sellers just kept putting out their stock, letting the buyers take all they want. And then the stock reversed. Now it rallied again and got back up to the same level. Remember, markets have memories. The market in October, this is probably a week ago, the market in October remembered that there was this top in August. So we have a clear resistance level. We have a clear support level. Now, say a particular investor bought the stock down here at 450, and they said, well, I want to sell it if it gets to 550. Well, guess what? They would have their sell order up here. It wouldn't get executed. So there's a chance that they would miss selling it. The stock could come back down to 4, and now they're losing money instead of taking a nice profit. Instead of having their sell order at 550, they should have probably put it around, like, say, 520. Right? So this is an example. We have to let the market tell us what to do. If you try to tell the market what to do, you're not going to have good results. We don't say, why is there resistance at 525? I don't know. We just know that there is. the market is telling us, don't place your sell order at 550. It's not going to get there, at least not anytime in the near future, unless there's some news or something. So the market is telling us where to place our sell order, right? Down here, the market is telling us where to place our buy order. So in the, the best traders in the institutional world, and probably in the retail world as well, realize that you have to let the market tell you what to do. A lot of students ask, like, if I buy a stock, how do I have a price target? Or I'm sorry, what's my time frame? How long do you stay in the market for? Well, the answer is easy. If you buy a stock at $10 and your target is 15, if it goes from 10 to 15 in a week, well, you have a 1 week time frame. If it goes from 10 to 15 in 2 months, you have a 2-month time frame. We're not like guessing when it's going to get there. We have to let the market tell us when to sell. Catalyst Bio, here's just another example of clear support around 415. So this is a year ago. And as we speak, this is, I think I made this chart last night. So we're trading right around this 415 level now. So the market has a memory. Last October, a year ago, it found support around 415, and it did again and it did again here. Actually, I'm sorry, I take that back. This is going through June, but it's a good example of a clear level. This is this RA Medical Systems, Raw Medical Systems. We have clear resistance at the $9 level. So if you bought the stock here and you're a really savvy trader and you rode this up, you would say, well, where should I sell it? Well, the former peak was around 9, so there's a good chance there's going to be resistance there again. Sure enough, there was. Then we had a big sell-off after. Now, fast forward to here, the stock rips higher. This must have been caught in some kind of a chat room or a meme stock thing here, because it like tripled in a matter of days. Where did it hit resistance? Right around $9. We also see here that this is formed. Now this chart is up to date. That there's been support has formed around the 290 level. So again, I'll bet you a lot of people that bought this stock down here said, if it gets to 10, I'm going to sell it, right? Why? Because 10 is a nice round level. People like selling at nice round levels. But guess what? Had the investor not known that there was resistance at 9, they would have rode it up. It would have gotten right up to about 980 during the day, but it came back and closed at the resistance, and then the stock collapsed. So instead of booking like a really nice profit because you missed the trade, you're going to end up, either underwater or break even. So what the investor should have done is said, well, let me look at a chart. Where was there resistance before? Oh, around $9. Maybe the resistance gets broken and maybe it goes to my level of 10, but I'm not going to take a chance. I'm going to have my sell order just below $9. I'm going to try to sell it if it gets to $8.90. So in this situation, you're letting the market tell you what to do. If the investor put his order at 10 or her order at 10, it would be them telling the market, please go to 10 so I can sell it. But you're just guessing. What the market is telling you is there's this important resistance around 9. So you have to take this into consideration when you're making your decisions. This is Tradex Health, another popular stock. We can see the clear resistance. I guess it got cut off. If we went this way, there was a 1. We don't start on 2. But we can see here, clear resistance at 795, here. Then intraday, it got above it, but it turned right around and closed back below it. Generally, we look at the closing prices. So this is just another level that's clearly important. Now, this is pretty cool. What is a resistance level, see how it was resistance, can become support. The resistance level converted into support. The $3 level is an important level for this stock. Remember what I said at the beginning. Some price levels are more important than others. So why does this happen? It happens because of seller's remorse. People thought they made a good decision if the stock trends lower after they sell it. But then when it goes higher, they regret doing so and they try to buy it back. So a lot of investors sold it here around $3. They thought they made a great decision. But then the stock rips higher and it comes back down, and look what happens. It finds support at a level that was resistance. Well, the reason why this happens is because a lot of the investors that sold it say, well, I'm going to buy it back, but I don't want to pay more than what I sold it for. So they placed their orders at $3. So they had their sell orders at $3. Now they're placing their buy orders at $3. If there's enough of these buy orders from these remorseful sellers, we form support like we do here. Same thing, resistance became support. And you can see this on a lot of charts. And if like a lot of the trading school students, I'm proud to say, are really starting to get this, because it's like anything. You got to have some practice. I mean, I've been doing this for 25 years. So I don't expect people to see levels as quickly as I do. But, if you spend a few weeks or a few months just paying attention to this kind of stuff, you can see you'll start seeing stuff like this. So again, we have resistance. The seller sold. It went lower. They regret it. Went back up through their price. And they say, man, I'm going to try to buy my stock back, but I don't want to pay more than I sold it at. So they placed their buy orders at 260. And there were enough of them that it converted what was a resistance level into a support level. Clearside Biomedical, what was resistance here? Around 225 became support here. So say the stock is trending lower and you say to yourself, well, I'd like to buy it. Where should I place my buy price? I'll buy it if it gets to 2. Well, it didn't get to 2 because the support is at 225. Why is there support at 225? Because there was resistance at 225. So now we have the opposite. Support levels can convert into resistance levels. A resistance level can convert to support. Support can turn into resistance. This happens because of buyer's remorse. And I'd be willing to bet a lot of people that are watching this have done this before. They buy a stock, it goes lower. They have buyer's remorse. They regret buying it. They say, well, I want to get out of this. I made a dumb mistake, but I don't want to lose money. So they place their sell orders at the same price that they were buying at. If there's enough of these sell orders, it turns the level into resistance. And that's what happened here. So support became resistance. Excellon Resources, another good example. Support at 235 became resistance. So the investors who bought it for 235 here thought they were great. They made a great decision. It was like, oh, it's going lower, it's going lower. Uh-oh, all of a sudden I'm underwater. They say, I want to get out, but I don't want to lose money. So I'm going to offer my stock at the same price that I bought it at. I bought it at 235. I'm going to try to sell it at 235. If there are enough of these sell orders, like there was here, it forms resistance. This SOS has a couple different examples we can see here. Support here became resistance here. Support here became resistance here. We had this little false move here, but it came right back. And now, once again, what was support may be becoming resistance. So buyer's remorse. We buy it, the stock goes down, we want to get out, but we don't want to take a loss. So we put our sell orders at our buy price. So if you understand buyer's remorse and seller's remorse, you can understand how levels change what they are. Support can convert to resistance and vice versa. So in the real institutional trading world, this is what we look at. Where are the levels? Where should I buy it? Where should I sell it? We also look at momentum and the trends, but I'm not going to get into that today because we just don't have enough time. And I think levels is probably the most important takeaway. So I would say start looking at your stocks that you like and see if you see clear resistance, see if you see clear support. From that, you can make your decisions. All right, let's see. So let's just review. Serious professional traders focus on important levels, trends, and momentum. Some price levels are more important than others. Levels that were support can become resistance, and levels that were resistance can become support. And overbought markets, overbought refers to a momentum. If something is overbought, it means it's trading above what would be its typical trading range. If something is trading below what would be its typical range, it means the sellers have really leaned on it, and that is called oversold. Now, why do we care? Now, I know many of you are probably not short sellers, so that's why I bolded this, but I literally know people that have made pretty much their career off of this. Oversold markets that reach support tend to rebound. So your stock's trending lower, it looks like it's coming up to a support level. If the momentum is oversold, there's a good chance that it bounces. So I see some questions. If you have questions, if you want me to take a look at if you want, or you know what, if you see a small cap stock that you think has a clear level, why don't you let me know? Or if you have a question, you can just drop it in the chat. All right, so this is not a small cap stock, obviously. This is the spider, but we can see here we have another example of a clear level. And you can see this in pretty much any chart. What was resistance became support, and it became support again. So how can we get a good idea if this current rally is going to keep going? Well, the 453 level was resistance for the spider. And this SPY follows the S&P 500. So this is a really broad index of the market. When I talk about the market, this is generally what I'm talking about. So we got to this level, it was resistance. We broke through it, and now we want to see, does this resistance become support? So far it has. So remember, seller's remorse. People sold it, now it's back above that. They placed their buy orders, and if they're enough, that forms support. So that's the sign of a healthy market. Stock markets don't go straight up, or financial markets don't go straight up. They go up in a series of ranges, right? It's like going up a stairway. Each stairway is a trading range that's higher than the one before it. And as it goes up, levels that were resistance can turn into support. So what was the top of one range is going to become the bottom of the next range.
Hey, what's up, Mark?
Hey, what's happening, my man?
Hey, just wanted to jump in here. Definitely want to let you guys know the trading school is amazing. I was there in the class for today's session, Mark, for the momentum session. And even though it's named momentum, we were going over all sorts of commodities, silver, copper. And I think it's just a great place for people to learn, for new traders to learn, because they have that guidance, that mentorship, that hand holding that we do offer in the trading school.
Yeah, in the trading school, what we do is there's 8 classes, and the classes repeat. So, and the students are there. It's not like you've just finished the 8 classes and you're done. The classes repeat. So, for example, today's class was on momentum. So we talk about momentum. I show examples, but then what we do is we look into the real market and look at how we can apply the fundamentals we just covered to the real market. So I think the 2 things that really are good about our classes. One is I have a lot of real world experience. I'm no super genius or guru or anything like that, but I bring a lot of real world experience to the table. And the other thing is we have this live application where we talk about the markets, because I can give an analogy. Say you're a boxer, right? You could work out, all you want. You could work on the heavy bag, you could run, but until you actually get in the ring with someone else, you don't really know what boxing is. So, right. And in hindsight, everything is 2020. So any trading book you buy, it's just going to show you a perfect example that was picked out from the past. So everyone's a genius if they have 2020 hindsight.
One of my favorite things, though, about your particular background in Wall Street and, trading with the legends, Mr. Cohen, Jabelli, people that manage 30 billion plus funds, is really that you've dipped really your Wall Street experience in small caps, in large caps, and a lot of retail traders, they just happen to be in small caps, understandably so, which does give a great plus, because a lot of people usually they just, say buy Apple or buy Facebook. But in your case, you actually have institutional experience trading small caps under Jabelli.
Yeah, my last fund too that I was at was primarily focused on micro caps and small caps. So I have a lot of experience. The same principles apply. The problem is that, or I shouldn't say the problem, but the issue with small cap is some of them are much less liquid. So, anyone could buy 1 million shares of Apple. It's an easy trade. It trades tens of millions of shares a day. But if you want to buy, 100,000 shares of a small cap or a micro cap stock that only trades 10,000 shares on an average day, that takes a little bit of savvy. You have to learn how to go out into the market and find it. It's a hide and go seek game. But yeah, so the same principles that apply to what I was just speaking about now apply to pretty much any stock or really any financial market.
Yeah, futures, crypto, Bitcoin, Forex. I mean, at the end of the day, it's people that are trading this. Even the algos are set up by people, so it's always going to be that's kind of why, like, one of my favorite classes, Mark, is the investor psychology. That is, especially from your side of the coin, from the institutional side, explaining it to retail. It definitely brings more clarity into what's going on behind, in the institutional level.
Yeah, most traders get wiped out because they let their emotions take over. And I've seen it in the institutional world. I mean, I've seen portfolio managers that have just blown up,
Belly up.
They end up getting divorced and, so it happens in the institutional world too, but you have to be aware of the psychology, because if you're letting your decisions be made by just guessing, or you're just really upset because you lost money or whatever, or you're really happy because you made money, it's not going to end good. You have to have self-discipline, which Rodrigo is talking about. So that's one of our classes where we talk about investor psychology and risk management strategies.
It's part of the education. And that's just something I just want to tone in for a bit, guys. Like, when I started trading, really the only education was the one that I was trying to teach myself, and try to become a neurosurgeon and teach yourself that you're going to see the bumps in the road. So definitely the community is very great. It's a very nice environment, welcoming environment, very educational environment. Everybody's asking questions. Everybody gets answers. You talk about trades on the trading school. It really is something that I wish I had when I started, but considering a lot of the viewers and there's a lot of new traders here, it definitely does bring a lot of clarity to have some guidance from somebody that's been there, done it, traded with the big funds, and is able to give that knowledge to retail traders so that we can become better traders for retail, remembering and keeping in mind that Benzinga focuses on retail specifically. Yep. And what's tomorrow's class, Mark? What are you looking forward to tomorrow's class?
Well, our Friday morning class, we really just review the previous 4 classes. But it's really, just open market discussion. Monday through Thursday, we have a formal class that starts at 7 in the morning and goes for 2 hours. And then we have a review class that goes from noon to 1. So we do lessons 1 through 4, Monday through Thursday. And then the following week, we do lessons 5 through 8, Monday through Thursday. And then the Friday class at 7 in the morning Eastern time is really just an open discussion for students to ask questions. We go through the markets.
I love that. I love the fact that you have office hours, you have Q&A sessions. A lot of people definitely need that extra guidance, that extra help. And Musique is asking, is there a live chat room? So yeah, we have a live trading chat room with Mark Putrino. The trading school does come with Benzinga Pro. So if you get into the trading school, you will have Benzinga Pro included forever. And in the trading school, we have a trading chat room for Mark. We have a chat room for education, a chat room for office hours. Basically, we have it all separated and split up. But yes, we do have a live trading chat room in the trading school.
And it's pretty active too. A lot of the students seem to be really getting into it.
Yeah, Netflix is one that, like, a big winner, because we did it on the workshop that we did for the members, and Netflix was a huge runner. I remember when we went over it in the session, I went ahead and bought some nice calls after that earnings call. I think it went pretty well, and the rest is history.
Yeah, it could have been that we decided to buy it because it broke this resistance level. recall the exact details, but just knowing what my style, that's what I would think. So that was down around 560, and now the stock is trading around 660.
Yep. And what's the update on the FedEx? I know we were looking at FedEx on the last session we did. What's been going on
Let's
there?
take a look at FedEx.
Benzinga Pro, Mike. Yeah, Benzinga Pro has trading view charts built in. We are including that in the trading school. That's correct.
All right. So this is something we have on our radar screen, and a couple of our students have gotten into it. So the 235 level was support, and it came resistance. So there was this gap here, which means there's not any real important levels in between where it is now and up here. So a bunch of the students bought it when it broke through. It's coming back a little bit, but we're still long it. Our stop out, meaning how we're going to get out if we're going to lose money, is going to be if it closes below 235, right? So basically, in that case, the students would have a really small loss, or maybe not even a loss at all, a break even. But if it keeps going higher and it gets up to around here, 250 is an important level. I think that's where we're going to sell it.
Hey, Mark, we're going to jump in really quickly. We have come past 11:10. We have Dragonfly, our next presentation, waiting in the wings. But Rodrigo, Mark Putrino, thank you for coming in with us for like 40 minutes, talking some financial education. We appreciate it.
My pleasure.
Good to
Thank
see
you,
you,
everyone.
Michael. Great
Good to
seeing
see
you
you
guys.
too, Rodrigo.